talk about HEX, PulseChain. That's probably what people really want to hear about.
Yep. I
PulseChain,
mean,
yeah,
no, I was just gonna say I really haven't been able to keep up with PulseChain because there's just so much going on over there. So much.
dude. There are so many moving parts.
Yeah. Yeah. Like I thought it was gonna be a little less complicated, but this shit is a beast. It's a beast, and I think that really just lends testament to what we're gonna see as far as the final product goes. Um, and
Hmm.
let me ask you this because I don't think I've ever heard your opinion on this.
Yeah, go for it.
Um, do you think people actually like to use Binance?
Um, I think they don't know any better. A lot of
Right,
them. That's just my
right.
honest take. Because I
Yeah,
know when
that's
I
a fair
used
opinion.
it back in like years ago, I didn't know any better, and so
Right,
now I do, and I don't use it. So
correct.
that's
Right,
just
right.
my
Okay.
that'd be my take
Yeah,
on
that's
it.
fair enough because you got to understand I'm not new to crypto, so I don't understand why people use that shit.
Oh, okay, you've been in the
Yeah,
game for a
yeah,
minute.
yeah, yeah.
Yeah.
I've been around since like 2010. I just was in
Oh
and out.
wow, nice,
Yeah,
nice.
yeah. I had Bitcoin back in the day, but like every other dumbass, I sold it, right? Because I didn't think government was gonna let it just rock like this, and clearly they can't control it. So that's pretty much just how that's gonna go down.
Right, right. Was there? Would you say there was a point back then where it could have turned out differently if they'd gotten in early enough, gotten their hooks in?
No,
No.
because it's on the internet, right?
Right.
So they would literally have to shut the internet off. How are they gonna do that?
Right, right. Maybe not on a network level, but maybe on a economic level, or would you say they're actually already kind of with their hooks
Yeah,
in?
no, they can't do anything. I live in New York, and I shouldn't own HEX, so no, right? Like, there's always a way
Fair
around on
enough.
the
Fair
internet.
enough.
Yeah, there's always a way around on the internet as long as you know how to use it.
Yeah.
And that's why understanding what's going on is key, right? Because if not, they're gonna block you from economic freedom because that's their goal. Their goal is to keep your ass in that seat talking shit about nothing like
Mm,
sports and fucking entertainment, right? While you twiddle your thumbs waiting for somebody to come save you when ain't nobody gonna save you. There's
right.
no 401k is gonna bail you out. You gotta find a way out, and that's how they do it by keeping you distracted with dumb shit.
Pretty much. Pretty much.
Yeah, yeah. It's crazy. It's crazy. It's crazy, man. Like by the time I realized that shit, I mean, I wasn't young, but I wasn't old either, So I try to spread that now so people can understand what's going on because it's easy. It's easy to get lost in the sauce. What's going on, Briz? And shout out to everybody in the chat. You guys are crazy because I'm definitely still working and I shouldn't be on the stream right now.
Wait, you're working? What do you mean?
Yeah, I work remotely from home. Every
Oh, you're working and on stream.
Yeah, yeah.
Savage. Double dipping.
Right, 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 right. Why not?
Why not?
Oh yeah, you can jump on the stream too, Doug. It's no problem. Give me a second, bro. They'll be acting like this is some type of altar or some shit. Yeah, I sent you the link, brother. Yeah. Anytime I'm on the stream, anybody can jump on, man.
Nice, nice.
I'm not some type of fucking Nazi with this shit. Like, I don't care.
So
Like anybody can jump on the stream.
I know a lot of people are interested in just kind of pivot into Pulse Chain because I mean I can
Yeah,
tell just with the views whenever it's in the title and the thumbnail it gets like almost 2x the views, so it's like okay, that's kind of a quick
interesting. I
insider.
hadn't noticed that. I hadn't
Yeah,
noticed that.
I mean
Okay, I'll be
they
throwing
just
that
do
in there.
better, and
Yeah, yeah, yeah.
I mean if
Who
you look,
doesn't want an airdrop, right?
bro, for real, and if you look at the like Telegram chat, I mean everyone knows this, like it's gonna flip the Hex chat soon in quantity of members,
Right.
right?
That's
So
crazy, right? Because that's brand new.
yeah, yeah. I have an interesting question because I don't know if you've talked about this on stream yet. I don't know. I know I haven't for sure, but some fun, I guess, Easter egg thought experiments would be like so when the mainnet goes live,
Hmm.
you're gonna have Pulse will then exist and it will have a dominant pair.
Sure, it has to, right?
Right,
Every chain has it.
right. So what is that dominant pair? I think is a really fun question to think about.
It depends, right? Because
Yeah.
I think it's gonna either be Pulse itself or PHEX.
Well, how can PLS major pair be PLS?
Oh, I'm sorry. You mean as far as what's actually trading on the chain? Yeah, it's gonna be PHEX, bro.
The majority liquidity of PLS will be PHEX, you think?
Yeah.
So would you not count the liquidity on the ETH PLS bridge because it's a bridge,
Yeah, I don't know about that one. Let me think.
right?
That's okay. That's an interesting aspect.
Uh-huh.
So, how do you look at a bridge, right? So, a bridge is basically a pathway from one network to another.
Mm-hmm.
So, is there actually is there liquidity on both sides matching on the bridge, or is there liquidity on one side, or is it just a data transfer? You get what I mean?
Yeah.
Because that's I think
Mm.
the question, because you're technically moving from one contract to another. You're not really moving money around, right?
True. True. True.
So
Well,
I feel like that's a claim, but I'm not really sure. I got to look into that because I've never thought about that.
you're not moving around money, you say, but aren't you essentially locking your ether in a contract and then either minting or unlocking Pulse on the other side?
Yeah,
Yeah.
but you're like swapping one for another, right?
Yeah.
You're not really. So you're not exchanging one for the other. You're swapping one for the other, which is different
Got you. Got you.
because you're like going over from one network to the other. So you can't have the same thing
Fair enough.
on one network and the other. Does that make sense? That's the way I view it.
Fair enough. Yeah.
Because you're leaving Ethereum and you're picking up Pulse.
Mm-hmm.
So I would think, right, it's like a data transfer because you're going from one network to the other. But again, I really have to take a look because
Mm-hmm.
that's just what makes sense at the top level.
Yeah. An interesting thought, I think, also is just because if you look at the majority pair on Hex, it's USDC, and so you ask yourself, well,
Right.
what if PLS majority pair or even PHEX majority pair were some sort of stablecoin on PulseChain, and then you start having to think about stablecoins on PulseChain, and you wonder like, because Richard has hinted a few times, he said, wouldn't it be funny if a stablecoin that wasn't backed at all held its peg better than
Yeah, he has
one,
said that.
right? And then you get into the whole like, okay, how fractionally reserved can something be? Uh,
Well, I think we got the answer to that in real time, right? I mean, it
what is
could
it?
clearly be infinite.
Infinite?
Clearly. I
Yeah,
mean,
I
look
think
at the
so.
dollar. I mean, that's what's going on, Dagro.
Oh, what's up,
How you doing?
background?
Hey, what's going on, guys?
Living the life, bro.
Just chatting.
All right, good, good. You guys
Yeah.
can hear me?
Yeah.
Yeah.
Yeah. Oh, hey, Gerardo, that was a super cool question. Yeah, I've never thought about that.
That's the goal here, is trying to get you guys thinking new
You
new
know, I gotta
thoughts.
be honest.
Yeah.
I've gotten lazy ever since I found Hex. You really don't need to do all this extra work. You got to understand. I spent 10 years doing all this hard work, and then here I find Hex. Like, okay, I can retire now.
Let me simplify my life a little bit.
Yeah, it's been crazy, man. Because like all this hard work you guys do with the TA and the charts and all that,
Yeah.
like it's oddly enough, it's not really like you can do it, but it's really more for fun with Hex,
Yes. 100%.
right? It's crazy. Isn't that crazy?
Yeah.
I think that's crazy, man.
It's beautiful though.
Not, yeah, because there's nothing else like that out there,
Yeah.
right? Where the chart doesn't matter, but yet it does.
Yeah, when you actually do something for fun versus like trying to get good entry points or, good trading points, you're actually just doing it for fun to see like, oh, are we going to go up or down? Yeah, it doesn't matter because I'm staked for 5 years.
Right. It doesn't even matter. You know, that's the interesting thing, right? A lot of people got in, like for example, I got in at 0.5 cent, and that was right before big payday. So I was able to buy a lot after big payday, right? When it was like
Yeah.
0.3%.
Mm-hmm.
And I really thought, just as an example, right? Because we talk about the technicals of Hex, I really thought when Hex hit 0.2% on big payday that it was going to retest um, that level because that's what markets typically do. And no, it just never came back. It only went down as far as 0.3%, a little bit above that actually, not even 0.3, 3.1, whatever. And that's a whole 30% difference, man. Right? Like it just never came back down there. Like it just said, yeah, fuck you, we're out. Like
Yeah.
that's crazy. Like a market doesn't typically do that. So that's when I was like, oh, so I'm just wasting time doing all this crazy shit. Because with Hex, you really don't have to do any of that.
Right.
It's crazy. It's really, really because it's unprecedented. right? We're used to slicing and dicing charts, man. And Hex really gives you the option, right? Like you don't have to do that. You can do it if you want
Mm-hmm.
because it still works, right? Like we call pullback points all the time.
Mm-hmm.
So it's not like it doesn't work. It's just on the bigger moves, it's going to be a little different. I think that's like the primary take home perspective that we need to have on that one.
Yeah, I mean, price only matters to sellers, right? So if you're not selling,
Yeah.
like, why do you care? At the moment, I mean, it's fun to, like you said, it's fun to think about, like,
Yeah,
but
that's it.
that's really it.
That's it. I mean, you know, it's funny. People always talk about price with Hex, but it's like, yo, you're in year 2. What are you worried about price for? Did you not just see what happened to Bitcoin over the past 12 years? Like, what's your rush?
Fact.
Like, that's kind of crazy. Like, you're just really gonna leave billions of dollars on the table. Like, that's crazy to me because
That's a good point.
what's going on? Yeah, what's going on? Lights out. You know, you gotta think, man. Like, this is a crypto. This is an actual crypto. So just because it started at 4 or 5 zeros after the decimal point doesn't mean it's not gonna hit $1, 2, 10, 20, 30, 40, 50, 100.
Mm-hmm.
It's still a market, right? And markets trade. Period. And this one trades in a freaking straw in a vacuum,
Mm-hmm.
right? There's only one way in and one way out. So when people are buying and people are selling, they have to wait for one or the other, or they have to get matched, basically, right? And the preponderance of buys is what matters versus the preponderance of sales. So the dollar amount doesn't matter; it's the number of transactions that is significant because it trades in a vacuum. Oddly enough, right? Because we're looking at the Hex being sold or bought, and the interesting thing is that no matter how many Hex are sold, what do you have on the other side? A permanent bid. People are always buying Hex, right?
Mm-hmm.
Yeah, that's
Always. People are rarely selling it, but they're always buying it. So that's why Hex always moves up and to the right. It can't move anywhere else. Literally cannot. Unless you have a bunch of people ending their stakes and selling it, where is the price going? Literally only up. It can't go anywhere else.
Right, and you can verify this. Like, just
Yeah.
follow the whale bot on Twitter. You can see the number of buys or sells, or you can even go in the Uniswap analytics and just see, like, in the last 40 minutes how much energy is entered and how much left. Like,
Yeah.
so many ways.
Yeah. It's crazy.
Yeah.
It's crazy, right? Because the market typically doesn't function like that. That's what's crazy.
It's true.
You know, markets typically, if you have, you know, a $1 million order versus a $500,000 order, that $1 million is going to swallow that 500,000. But this market doesn't work that way, and that's what makes it so unique and so powerful at the same time once you understand it. Because a lot of people don't understand that. You know, they really think that this trades like everything else, and it just doesn't. It just doesn't. You gotta really be careful. Like that. That's something I learned early on, right? And that's why I like to tell that story about the 0.3% dip. Because if you've been in markets long enough, you know that if price touches a level, it comes back and retests it. If not the same level, lower before it actually moves higher. So for that to be a 30% delta and not even come and touch that 0.2% level, like that's strong.
You're talking about
Right,
the big payday dip, or?
Yeah, I'm talking about the big payday dip now.
Okay.
Like I'm just relating it to the technical aspects of Hex and how odd it is technically, right?
To your point, though, that if you look at just the candle, like the daily candles, it's actually a double bottom, right?
Yeah, but that's the thing. It's a double bottom with a 30% delta, bro.
Oh, got you.
Yeah. Yeah, just because it's so small, right? Like the price level is so infinitesimal, right? Like it's very, very small. It doesn't seem like it's much of anything, but yeah. You know, a 30% delta is a lot. Hold on, I got just pulled the chart up. Give me a second.
Yeah.
Yeah, I was gonna say you're gonna have to pull the chart up.
Yeah,
I'm not as technical as you guys.
Yeah, no, it's all good. I'm actually about to log out of work, man. Fuck that shit. Give me a second. Motherfuckers is lucky I even worked today. I still haven't been to sleep getting back from bakes.
Clocking it out live.
Yeah. Word. Jesus. All right. Let's pull up this chart. Because it's really, really crazy. All
Oh
right.
hell yeah! This is what the people want.
Yep. So the low here, oh, it was 1.99. Damn, I feel like more of a dick now. Okay. And then we get that days later low of 2.8,
Mm-hmm.
right? And this is on the daily. So this shit isn't even right. I'm here remembering the wrong prices entirely. I must have just bought on a 4 minute, 4 hour chart at that level. That's must have been what happened because
Yeah.
there's no way. Hold on here. Wait, what? I guess it was a smaller time frame. Oh nope, here you no, yeah, no, it was a smaller time frame. Damn. Yeah, I
Mm,
don't think I'm gonna be able to pull it up on this chart. I must have been using Hit BTC at the time.
got you. Yeah, yeah.
That must have been what it was because I didn't know about a lot of this stuff at the time. You know, I was so new. I'm not an I wasn't really an internet person at the time. So yeah, it looks like I was using Hit BTC. But I mean, this is even crazier, right? Because that's a whole 50% difference basically on the USDCV too. So this is even crazier, right? Because you got 0.3% here. Ah, no, this might be the chart. Nah, I doubt it. I didn't know about these charts. Let's see here. What is this? Is this right?
Such a nice bottoming formation. Like
Yeah,
a
yeah, it's
nice.
very nice and round.
It's almost like an ascending triangle from November 17th to what is that? Like December 12th. That whole thing.
Right here, yeah,
Mhm.
That 4 or 5 level of resistance ish.
December 8th. Oh,
Yeah.
you mean up here?
Yeah, yeah.
Yeah. That's December 12th. Yep.
Gnarly.
Yeah, this is. Let's see. Huh, the price isn't reading correctly here. Not sure why.
I mean, yeah, price took a dump that day.
Yeah, but I don't remember going to half a cent. Okay, here we go. All right, yeah. So it was 1.9.
Yeah.
Then you came back and only touched 2.8
Yep.
later. Let's see here. Huh. This is crazy, man. I mean, there you go, right? Like,
Yeah.
this is the power of decentralized market with a straw, right? Like, it trades through a straw. Look at that,
Yeah.
40% delta. Like, that's unheard of. Like, I've never seen anything like that in all my years of staring at charts.
Really? Okay.
And yeah. And here's something you got to understand, right? Like, there's no way to learn technical analysis. You just stare at charts and whatever makes sense to you, that's what works.
Mhm.
That's literally how TA works, right? Like, you can try to read it from a book and all of that, but it's just not the same. It's
Right.
not the
Right.
same because everybody has a different way of looking at things. So there are some things, right, that are plain vanilla, like this,
Mhm.
like the double bottom, right? Like, look at this, right? Like, this is another example of that, and it reacted better than the first spike down. But this is a function of volatility, right? Because so many people were selling because of big payday and whatnot.
Mhm.
But this here is more normalized price action because this is just literally people buying versus people selling and nothing more. You didn't have, right, a extraneous event, a one-time event, right? That was just gonna happen that day and that's it. I mean, this is why HEX trades so smoothly, right? Like, it never really actually breaches prior lows
Mhm.
because it can't. Because
Crazy, bro.
somebody's always gonna be there waiting for it. I mean, this is a crazy chart to look at.
Hmm.
Like, this is crazy.
Yeah.
Yeah, I mean, you have people with both hands with buckets and whatever else catching any dip. You know what I mean? Like you
Yeah.
said, it doesn't go to that previous low.
Nope. And I mean, look at this RSI, right? So it took me a long time to learn how to read RSI, right? But you would think that this is topping out because of how the RSI looks, negative divergence, and all this, but false because it hit that middle band and it bounced off of it. So this actually recalibrated to move higher. So this shit is just funny because people just don't understand. I mean, like, just buy and enjoy. Nothing to think about. It's an asset. No such thing exists in crypto. Period. Very simple. Very simple. So, you know,
Hey, Wales, I got a question for you.
what's up, brother?
Have you ever just, without the, trading pair showing Hex BT or Hex USDC, have you ever showed this chart to like a coworker or somebody in
Oh,
your realm of
actually,
work?
yeah. I got a coworker. My partner is actually she's a Mexican. Yeah,
And what have they said? It's like, what the hell is this?
yeah. They understand. They trade too, so they understand what's going on. They're like they get it. They just buy like you're supposed to. Then like they don't play no games, right? Like they
Nice.
just get it, So it's 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 pretty straight up, right? And once you understand Hex, man, it's just something else, and
Mm-hmm.
it took me a while to come to terms with the fact that at this point in time, this is really it, and it's hard for people to understand that. And I get it because I battled it for a long time too. But this is it for now. Like they might be. You keep an eye out because there might be something else, but this is it for now. Period.
Mhm.
There is nothing better on the market. Um, and that's just how it goes. I mean, until something better comes along, that you just got to accept things for what they are, because that's how you make money, right? You don't make money by lying to yourself, right? So, that's something important to keep in mind too. 'Cause a lot of people like to, and again, there's nothing wrong with looking at other assets, but there's a difference between an asset and a non-asset, which is thereby a speculative asset, right? So you gotta know the difference. There's a reason Hex moves how it does versus everything else. And I understand for a lot of people it was hard for them to see that during this time, right? Like even though hold on, let me get this V1 because the V1 is really my favorite. I think this shit showing. So just because price went sideways, right? For a long time, a
Mhm.
lot of people in the community were disgruntled for whatever reason.
Yeah.
Um,
Yeah, like
and
like during that May to even like almost November. Yeah, I remember being there. It was just, I was looking at the streams, but it was just, it's dreadful just going sideways. Yeah.
yeah, all of this, right?
Yeah, all of that. Yeah. It's just
Yeah, and that was just because people, they didn't understand how markets trade. Like, what did you like after a big ass move like that? What the fuck you expect?
exactly. Yeah. And I didn't think about that. But like,
Yeah,
what do you expect? Like, you can't just go up forever. You know what I mean? There's
yeah.
peaks in the game for sure, or dips in the game.
Well, it's not even that. You got to realize, like, this is something that's very hard for people to grasp. Markets are a microcosm of human nature. Even if it's electronic, we're the ones on the end, on the other side, clicking buy and sell. So it's not robotic, no matter what. Even if it's coded, a human coded that.
Yep.
So it has human intuition embedded in what it's doing. You understand? So this is why, even though, right, it runs up 2,000% or whatever this number is supposed to be, because that isn't correct. Um, you got to understand, even humans got to rest, right?
Yeah.
So just like everything has a trend, nothing is linear, right? And that includes life, right? Like we experience up and downs, so why would price be any different? And then the funny thing is that in reality, depending on when you got in before this point in time, you didn't have any ups, any downs. You just had ups.
Exactly.
So what the fuck, what I'm saying? like it's crazy. It's crazy. And then on top of that, you got all the supply coming out. This is launch phase. Launch phase. Lucky it was this good.
Mm-hmm.
That's just a testament to the design of Hex. And this
Exactly.
is
Yeah.
yeah,
We had
and
so
this
much
is
supply
why
coming out, and look at it.
yeah, and now look at it. Like just as described, right? Like once that inflation came out, that was it.
Right. How many days are we post big payday?
I'm gonna say yeah, I don't remember because I haven't updated my charts in a while, so I gotta do that shit in a little bit. Let me see here. This is big payday.
Like 200 and something.
Yeah, we're probably like 220 or something like that. Yeah, see about 220.
Nice.
Yeah, 220.
Right.
And then we're strictly outperforming Bitcoin on every front. Every front. Like it's insane.
Notice how post big payday it's only uptrend.
Only nothing
Only.
else. Nothing else.
Yeah.
Nothing else. It's sick. It's sick.
I'm curious, bro. Do you still stand by your $10 end of year prediction?
Yeah.
And I'm curious because I'm a charts guy, obviously. Like I'm
Mhm.
curious, and you're a charts guy, obviously. And like, how did you arrive at that? Have you shared
So
this
it's a
yet, or
yeah, I've tried to, but at the
okay?
time, people weren't really ready to understand what I was saying,
Oh,
and
for sure.
that's why I started doing all them other streams, talking about what an asset is and all this other
Yeah.
shit. So again, right? Like, look at what's happening now in the market. Like, let's just take a look at the market as a whole. Like right now, the whole market is pumping, right? But
Yeah.
what happens when the market stops pumping?
Hmm.
People find hex really quick. Trust me, I've seen it. I've been around long enough to know, and I'm sure you guys have too. Right? When a market retracts, when the crypto market contracts, people find hex. They're like, "What the fuck is this? Why is this the only thing that's green?" Happens every time. So that's one thing, right? People
Hmm.
think we're out of the bear market. I don't think so. Um, and I'll talk about that in a little bit, I guess. Um, but anyways, that's another thing, right? I don't think we're out of the bear market. That's two, or the contractionary period. There's really no such thing as bear markets in crypto, right? I mean, in my mind, a bear market is something that really takes you back to the lows, right? Like crypto doesn't really make new lows.
Right.
It just retraces and it keeps going higher. So while people think it's like a negative point of view, it's not. It's just how markets trade. Like nothing moves up in a straight line, right? So, again, we're basically number three, right? Tether doesn't count.
Agreed.
So we're number three. And excuse me. You also have the added benefit that a lot of people are realizing. Coin market cap is a joke. They're gonna find Nomics eventually. So that's another
Hmm.
thing. Another thing is a simple fact that now hear me out on this. When you got coins that do 50x and don't do anything, you got to think Hex can at least do 20 in 2 years because it's an actual asset that produces a yield. It's an actual asset. It's unlike anything else in crypto.
Yeah.
And the only thing that's really keeping it under $1 is the fact that nobody knows about it.
Mm.
I mean, look at the quantity of coins outstanding. It's gone up and the price is still up. This used to be 571.7 something billion before I went to Vegas, and now it's up because I haven't looked at it in that long. So clearly, the vacuum it trades in doesn't give a fuck about the about the quantity of supply, right?
Right.
So what do you think happens now? I need to find something. I want to show you guys now. This is important. I know you probably haven't seen this, Gerardo, but I did a stream on what reverse repos are,
Okay.
and this is basically the Federal Reserve withdrawing liquidity from the market. So what does that mean? What it means is the entire reason the market has gone up nonstop for the past 10 years. Let me do, yeah. Let me delete this or hide this. So the reason the market has done this for the past 12 years, I mean, look at the market from 2200 to now, right? Like this is just ridiculous. Anyway, so the very simple reason that this has happened in the face of probably the worst economic period in American history uh, is because of the Fed, right? And how markets actually work, and how Wall Street is designed, right? Like you have a lot of products that are designed to trade one way and one way only. And interestingly enough, this is the way, right? Up and to the right, so to speak. But the problem here is that these are not actual assets. They're speculative instruments, right? Like
Correct.
there's nothing backing an S&P 500, index, or even the companies themselves, right? Unless they have physical, tangible assets, they're not actually worth anything, especially if they don't have cash on the balance sheet. So you've had a preponderance of extreme debt levels, just increase to rates never seen before, at a pace never seen before. And this is all this, right? Like we have the biggest quantity of triple Bs, I think it is. Biggest B rating. Uh, yeah, we have the biggest allocation to B-rated bonds, I think, in history. And the reason that's insane is because that's, like inferior to high grade credit. So it's like you're taking a major risk on the credit side, because the credit side is basically you loaning money out, right? So that means if the balance sheet isn't right of that entity that you're loaning the money out to, you're going to get screwed, right? And, that's insane. Why would you do that? But people are doing it, right? Or entities are doing it. And look, this is 2019. 7 trillion. Now, I think, 53% of investment grade bonds in the U.S. That's insane. That's never happened, right? Never. And this is, you see, the midway point between real trash and passable paper, right? But again, if you're not doing your research correctly here, your due diligence, as we would say, you're going to get fucked, right? Now, the reason I'm bringing this up is because this is just a new layer of risk that has been introduced into markets that we haven't seen the effects of yet because of this, right? And that is a function of this. This is now reversing. Their goal here is to reverse this. So, if that does happen, what do you think is going to be the first thing to be sold? Right? You think people on Wall Street are going to give a fuck about Bitcoin? No. Give a fuck about Bitcoin. They don't know any better. If they did, it'd be a different world. But they don't. So it's not. Right? I mean, and it sounds trite, but it's that straightforward. Trust me, these motherfuckers are morons that work here. Like, it's not even a joke. It's just what it is. And then also, you have to understand that they have their own agenda as well, right? They rather their coin than than something that's decentralized. But also, just so you guys know, I'm gonna actually do a stream to basically prove that Bitcoin is centralized, because people like to say it's not.
Yeah.
So I'm gonna shut that shit down because I'm just tired of it. It's annoying. But anyway, look, one thing I do want to say about Vegas. Sorry, guys. I'm just still trying to catch my voice or recover my voice. Vegas really helped me realize that HEX itself, along with the community, is really the new standard for crypto. Yeah. Think about it. We cross stream all the time with each other. Like, we don't really give a fuck, right? Like,
Right.
we just did it, no problem. I've never seen that happen anywhere else. I've never seen cross streams in any other crypto community. And that by itself is a little, unique. Everybody in the community is kind of the same frame of mind, right? Like, they're all about integrity and speaking truth to power at a most basic level, right? And that's something that you just don't see. Like, people with principles, right? A bunch of rich people with principles. Imagine that. People that don't care about money. What can you tell people like that? Nothing. You just got to shut the fuck up and do as you're told. So it's going to be a fun ride, man, because, the Hexagon community is just different, right? And so you got all of those anecdotes, right? I mean, let's take a look at shit coins, all right? Litecoin, Bitcoin Cash.
Right.
I mean, fuck, Binance itself. Come on.
Right.
You're going to sit here and tell me a $10 call in 2 years is, Chainlink, really? It's not even fucking decentralized either. Come on.
Right. It's just a roulette wheel.
Come on. You're gonna sit here and tell me $10 is out of this world? I think that's a conservative call, honestly.
Mm-hmm.
Yeah, as crazy as that sounds. Now look at Filecoin, right? Filecoin is an interesting crypto to me because they actually have a very practical use case, right? But look at how they've traded. They've gone all the way up, I think as high as $350 or so. And look at them now. $60.
Ouch.
185. Whatever. So, or 190. That's the highest it went. And now it's at 60. So, the market doesn't always know what's right.
Right, right.
Sometimes you have to be able to discern when is the right time to attack an asset. Because I honestly think, Filecoin, once they get their shit together, right, it could be something very, very powerful. But that's a lot of work over there, right? I'm not with that. Mm-hmm. I'm with this. I like interest. I like, XYZ. So again, right, you have a, and I mean, come on. Let's, excuse me. Let me see if we got any rates here. Okay. Nope, no rates there. That's just $1 billion marks. All right, so I'm just looking for some, let's say, high yield debt. Let's see. I'm just looking for something that's going to give me some high yield bond rates, just so you guys can really understand. Let's go with the past month. All right, let's look at this nonsense. Okay, look at this. 4% on the, and this is just an index of the effective yield, meaning on average, this is what you will earn on a high yield instrument, meaning trash paper, brother. Meaning if you put your money in here, you might not get it back for real. This is the real rug pull factory right here. Outside of Binance, high yield debt is definitely a rug pull factory. Like, this is major risky. For high yield debt to be down here, this is crazy. Insane. Never in history.
Mm-hmm.
And they don't even have everything here. And they don't even have all the data points here. Because you have to remember, we've just hit, let me show you this. Actually, what am I doing? This is the 30-year yield from 1987 to now. So you started off at 9% with an all-time high. And this is just in this data set, right? This isn't everything. So from 1987 to now is all this is showing. And we only went as high as 10.25% in this time frame. And this is the safest yield, right? Now, this is only going back to 98, right? So let's look at what 98 was showing. Oh, December 96. Okay, December 96. Let's come back. Look at that. December 96. So it opened at a yield of 6.5, 654, closed at a yield of 673, 74, right? So basically a quarter of a percent, right? In 1 month. And that's just 6.5%, right? 6.7 versus 9.5 for high yield, right? So right now we have a high yield on the index on this effective yield, this average basically of 4% versus 2, right? So we've gone from a 3% spread basically to a 2% spread, but in a ridiculously riskier fashion because we got supreme amounts of debt that aren't backed by anything. So it's really a dire situation that we're in right now. And if they continue to do this, I mean, let's just look at the progression, right? Let's just do that. Why is there 2? Jesus. All right. I mean, just look at this chart. This is insane.
What's this a chart of?
Overnight repo. This is a chart of this activity.
Mm-hmm.
So this is how fast they're trying to drain the markets now. What do you think is going to happen when people catch up to what's going on and they have to start looking for ways to acquire cash because they can't? Because, okay, so let me explain what a repo is. A repo is when an entity such as a hedge fund or a bank or whatever, anybody is looking to leverage their book because they have collateral on their book, such as a treasury security or something like that, something that's safe, right? That the person lending them the cash is willing to accept. Right, so it's usually a short-term loan, and that loan is used to leverage up the borrower's book. So what's happening now is that the Fed is no longer is basically recalling those loans. So that means people have to look for cash to pay up to the tune of 840 billion right now. Million, sorry, or billion, 840 billion. So what do you think starts to happen the higher this goes, right? Like the market is going to see stress. Like people really think.
I see.
Hold on a second here. Just go back to Bitcoin because I mean, like people they just don't get it, and it's okay. You know, people like to think that everything stays the same, and no, it does not. You know, we're going to need some serious buying here. Like these wicks look interesting, right? But they're just wicks. That means somebody sold down here, even though somebody bought it. So we have to actually see the follow through in price because guess what? The trend is still bearish. The moving averages tell you this. A lot of things tell you this. Until price gets above this, it's actually you're not out of the woods. Like you have to break this resistance area. You have to break out of this box. Like price structure is real. The market doesn't just escape it because you want it to, unfortunately. It actually has to. And now look, support, this looks like a good support area, right? It does look like a good support area, don't get me wrong. But you have to be mindful of the downside and the simple fact that, you know, times are changing. And sometimes what you think is true isn't always true, especially in crypto. Because look at what we had here. It looked like we were bottoming out, right?
You're saying 30K is the new 6K?
Might be.
Yeah. I've heard that. Been thrown around a lot.
Might be. That's assuming it doesn't go lower, right?
Right.
So, because I mean, again, a typical market could easily come back and retest 20K or 15, right? Because these are actual support levels.
Yeah.
Right. So it just depends. Right. It depends on the price action. But again, right, Bitcoin is centralized, is basically owned by the Fed. If they keep doing this, there's no telling where this is going to go. Right? Because you got to understand, there's a reason they were promoting the hell out of Bitcoin for the first half of the year until basically April. That wasn't a coincidence. That was by design. Right? Like 10 years, 12 years this has been around. They didn't want you knowing Bitcoin existed, and all of a sudden Bitcoin everything? Come on. Like, it doesn't work like that. Nobody's trying to give you economic freedom. Don't be gullible. Don't be gullible. Nobody's trying to give you economic freedom, and that's a fact, not an opinion. If that wasn't the case, we wouldn't have to get paid in fiat. You wouldn't even have crypto. Period. It wouldn't exist. So understand what's going on. Don't fall prey to, you know, public figures lying to you as always.
Those are some great points, man. Like, it took me a while. That's why I was staying quiet. It took me a while to catch up on what you meant with the bond yields and all that. Like, it goes over some people's heads, but I think if you just listen enough, it starts making sense.
Well, tell me what I need to explain, because I know it's a lot. Like, I know, but
yeah, no, I mean, I think I'm all caught up by now.
So okay, why do interest rates matter? What's going on, JG? Look, hey, shout out to everybody in the chat. Balaji, I see you, homie. This is Perp. What's good, bro? Thank you guys for tuning in. I mean, this is last second. We just yeah, I remember you trading Filecoin, Balaji. Yeah, we both thought that shit was gonna keep going when it was like at 160. Man, that shit just cracked further down from that motherfucker. God damn, that shit was ugly. So look, This is the biggest thing about money that most people don't understand. Money has a cost, but the only people that pay it are you and me.
Mm-hmm.
Simple as that. Not the government, not
Right.
the businesses. We pay it because we're the ones that consume and pay taxes, right? And if you know how to read the tax code, then you understand that even businesses really don't pay taxes because America, it was designed that way. It was designed for you not to be a slave. Actually, if you didn't know that, I know it seems unbelievable, but trust me, that's actually true. Yeah, America was not built for you to be a slave. That's just what they want you to think. That's why the tax codes are written in such a way. Why else would a business get a tax? Well, at least they used to. I don't think that they get tax breaks anymore on hiring people, but it used to be the case, right? If you provided employment, you were afforded certain levels of accommodation in the tax code, right? Because you're
Nice.
providing economic value, right? Like
Right.
it's crazy. Um, and it's little things like that that people don't see, right? So when you're looking at the cost of money, this is what the interest rate is, right? You got this as the cost of money, but then here's a catch: you're not at the closest spigot, right? You're far removed from it. So let me see. What's the word I'm looking for here? Uh, can't remember the word. Balance sheet. Yeah, here we go. This is it. Oh yeah. Wait, is this right? No, this isn't what I want. All right, let's see. Yeah, like I haven't looked at all this stuff in so long because it's just unnecessary.
Mm-hmm.
But just to explain, it's important that you guys understand if you don't. And what I'm looking for now is basically, yeah, well, the reserve balances on the Fed's balance sheet. No, this isn't it. Fuck. I'm basically looking for the Fed's balance sheet. Can't fucking find the damn thing. Let me see. So basically, what I want to show is all the money that the Fed has essentially put out to the market. And you'll basically see that the trend for the time period that we're looking at earlier, with respect to the S&P, is the same as what they've been pumping. But damn it, this isn't it. God, I can't remember what it's called. Let me just look this shit up. All right. Give me a chart, man. All this damn text. What am I supposed to do with this? Nope. I would like a chart so you guys can see. I don't have a chart here. Okay, this is good enough. Yardini. Yep, this will do good just fine. 724. So this is 5 days old.
Oh, nice.
So this guy is an economist on Wall Street. He's very good. He has his own service. Not promoting him or anything, obviously. But if you want to learn, look at shit up, right? Like you can find some free stuff. You don't got to pay for anything. I learned a lot just from reading from other people. Like, that's how you learn. You don't just know things. You just learn over time. So check this out.
Mm-hmm.
We're looking at basically everything that the Fed has loaned out right here. This is what this chart is, right? And if you look at it beforehand, it was below the $1 trillion mark. And ever since right before the start of 2009, it was just pumping it, pumping it, pumping it. So this is all we've seen for the past 12 years, 13 years, no matter what you look at. Straight pump, right? Look at this. This is all the money they've been printing. Federal Reserve notes. Just look at that change. This is insane.
Yeah, I remember back in like that 08, 09 market crash, and they had to pump up some money, and look at the money they pumped in, just last year, the COVID. It's like
Yeah,
significantly.
they keep printing. That's right. They keep printing. So all of that is gonna eventually, um, let's go M1. All of that is gonna eventually hit markets. Like, look at this. This is just from 2020.
Sheesh.
Yeah. So what's the end game? Just keep printing.
Yeah, that's all they do, bro. They don't do anything
But
else.
is there like a D-Day where it's like
Nah, there is no D-Day. D-Day is whenever people wake up and stop wasting their time with the system. I mean,
The chart almost looks like the share rate in HEX,
yeah,
for real? It does.
it's crazy. But I
stepwise.
mean, yeah. Yeah, I know what you mean. The form, the pattern.
Yeah.
But yeah, it's weird, right? Because it seems like it has to end, but I've been at this for a long time. Um, I don't see an end to it because as long as people believe in the system,
Yeah.
they're
How
gonna keep
much did they?
participating in it.
Do you recall how much they printed back in 08 and 09? I didn't really see how much it was back in the crash, but
Total.
yeah, compared to like what they did just last year.
Yeah, no, I don't. Hold on, is this right here? It's probably about yeah. They pumped. They went 200% right away because it was like at 800 billion, and then they went straight to like 2.4. So that's eight
Yeah.
times three.
And what
Uh,
about the COVID? It was from 20
the
to 5.
COVID. Let me see. Looks like we went a whole trillion on that one and counting. But it seems like that's what they pulled from the market so far through the reverse repo. So we'll see. Let's see here. So yeah, so the cost of money, right? That's how they control it, right? That's how they control everything. And that's why interest rates are so important. That's why I talk about them. And I never really realized that is a little bit over people's heads because it's just normal to me,
Yeah.
unfortunately. Yeah, so my
Hmm.
bad on that. But this is all about the cost of money, right? And that's how they control it. Now think about it like this: if you had the ability to borrow at zero, why wouldn't you?
Mm.
And that's what people have been doing. For them, it's at zero because Wall Street is at the front end of the spigot, right?
Hmm.
And if the banks don't want to lend, well, you don't get any.
Mm.
Simple as that. Because so okay, you have the Federal Reserve, and then you have the primary dealers of the Federal Reserve, right? So what are the primary dealers of the Federal Reserve? They are essentially the owners of the Fed, because those banks have owners, right? And that's the reality. That's not what you're going to find, right? Unless you look for it. They're not going to tell you that on the Fed's website. Clearly, there's a conflict of interest. Let me see here. What is this? Primary dealers. All right, here's a list of primary dealers. So these entities are basically shareholders in the Fed. Some are new, some are old, right? But this is how it works, right? We know this entity. How is Deutsche even still not fucking bankrupt,
Alive and beating.
right? Like clearly they're being kept alive. There's no fucking way. I mean, it's just crazy. Just look at all these entities. UBS is another one. How the fuck are they still standing? Wells Fargo, another one. If it wouldn't be for the mortgage origination business, I don't think they'd be standing. Nomura is another one. How the hell are they still standing? So there's a lot of entities that shouldn't exist that still do merely because they are primary dealers. And unless you've been around, you're not going to know. You would have to do your research in terms of history in order to see that. Like this, I don't even know. Like this is a hedge fund. Why the fuck are they a primary dealer?
Uh-huh.
Or at least they were. Did they change? Let's see. They became a broker dealer. There you go. Okay. So there you go. A bunch of broker dealers, right? Because this is the only way, right? You can really be a primary dealer to a certain extent. Just because you're a broker dealer doesn't mean you're going to be a primary dealer, but to become one, you are going to need to be able to make a market, right? And that requires the ability to make markets. which is being a broker dealer. So when you're looking at all of this stuff, right? You put like connect, like you got to connect dots. Nobody's gonna tell you anything out here, and that's the biggest thing you got to understand about markets. Nobody's gonna tell you anything. I spent like 5 years trying to short the S&P before I figured out that shit was never not gonna go down because I wasn't understanding capital flows are what matter, not economic point of view. It's irrelevant, entirely irrelevant, entirely irrelevant. All right, let me do some questions in the chat because I know I saw one or two. Hold on, let me scroll up. If you guys got any questions in the meantime, what's going on, middle class? Thanks for coming through, brother. What's going on? Give me liberty. Yeah, can't say in effect. Sure, those close to inflation get all the gains. This is why Hex is staking his God mode. Correct. That's right. When you're at the forefront of the spigot, you're gonna get the most, right? The leftovers are what's going to go to everybody else, and that's basically it. That's how markets work. And that's why you have to be a broker dealer, right? If you're not a broker dealer, you can't make a market because you're receiving at X and then you're making a market at Y, which is a spread, and that's how you make that market. And you get paid and all of that. So like I went all over the place to explain my $10 call, but it's really it's really simple. You got a great community, which is to me the biggest thing. You have the fact that Hex is a crypto, an actual crypto, not a project. You have the fact that it's an actual financial asset. The fact that it works 100% of the time. The fact that you have shit coins out there that are worth more. Like, true. This provides economic value. How could it not be more than $10? Like, it just doesn't make sense.
Yeah.
Right. And given how it trades, I think we can expect more than that, within the next 5 years. Like, it's going to be crazy because this really trades like this, right? Like, it's crazy. This thing is just straight. Now, look at this. This is what was happening before the Fed started giving money to the banks. So what this is extra cash that these institutions couldn't find what to do with because they weren't willing to take the risk. Because that was money, it was theirs. So what would happen is they would put it with the Fed and earn a small yield on it. And that is almost close to what we know as a Fed funds rate, but it was a little different. It was a little different because they had a different name, but it's close to it. That's close to it in terms of the rate as you can get. Let's see here. Yeah, whatever with that. Doesn't matter. All right, that's it. So all of those things, right? You got to take all of those things into account. Like, how is Hex not worth $100? It provides economic value. Nothing else in crypto does that, period. And nothing else in crypto is a crypto. So literally just based on those two facts alone, it shouldn't even be a question.
Exactly.
Yeah, it shouldn't even be a question. So I don't know. The problem with predictions is that they're predictions and they're based on time, and we can't control that variable. So if I'm wrong, I'm wrong, man. It doesn't matter. I know I'll be right within the next 48, the next 24 months or 18 at this point, because it only has one way to go. So
no, fair enough. Fair enough. Yeah,
it's got to go up and then provide positive cash flow.
But it does provide positive cash flow. That's a crazy thing.
Yeah, that's what I meant. Yeah, that's what I meant. Provide cash flow. And I don't. That's just amazing. You know what I mean? Own something that provides you so much cash flow, positive cash flow,
in a dynamic fashion, which is unique.
Yeah.
That's unique, right? Like, yeah, you'll have what do you call it? Variable rate bonds on Wall Street, but again, there is no yield on Wall Street. So what are you actually getting? You're not getting anything. Like, just the whole economic landscape is perfectly set up for Hex. Literally. Because you can't find yield in the real world anywhere. And then when you do, it's not worth the risk. Right? And then anything else that's out there that's moving is trash. Right?
It's so true, man. Yeah.
Like, it is what it is, man. It is what it is. And you gotta just look at the facts, man. Like, I don't think it should be that hard. Like to me, this is an easy call. But again, I got so much experience that I guess that's why it makes sense to me, right? And
Yeah.
I think this here, right, is like the biggest thing. How do you have 100 million more coins, right? Hold on, what the hell just happened here? Did I just get rid of the damn? All right, here we go. 100 million more coins of supply, but the price is up. Like that is amazing to me. That's surprising to me. Let's see
Very, very
here.
cool.
All right. Let's get.
So
Go ahead, man.
traditionally in traditional markets, where do people go and get yield if they don't know about obviously crypto or hex? Like where do they go?
Yeah, so people usually get into dividends, paying stocks and stuff. What's going on, Ryan Lopez? He was out there in Vegas too, man. Shout out to him. It was a pleasure meeting you, brother. You know, yo, so there was so many people in Vegas. It was crazy, man. Nobody got enough time with everybody. Like it's crazy. It's crazy. It was a great time. But yeah, they go to dividend paying stocks, stocks and bonds, right? Like the basic stuff. Nobody really knows anything else, unless you dabble in, or you come to find out above or about like options and how to make income with options, right? And even that's not really straightforward. So it just depends. It just depends. Let me see. I'm just looking for questions. But yeah, it depends. They're not. There's not that many places. That's the thing. All right, like there's not that many places, and that that's the weird thing.
Right. And
Um,
what is like the dividend stocks and stuff like that? What do they pay?
it
It just
depends.
depends on their earnings.
Yeah, it depends on the stock.
Yeah.
Uh, it just depends. Let's see. See what this mainstream crap has here. All right, so look at that, 2.3%. It's not going to be high if that's what you're wondering. No, it's not going to be high.
Yeah, just to get a visual. Yeah.
Yeah, no, it's not going to be high at all. No, I mean if you can get 5%, you're lucky. Um, it's not really going to be. Oh, okay. Look, here's one, 5.5%.
TFS only.
So let me explain something to you guys. This is interesting. 50% return this year. Let's see if that's actually valid or if it's just shit stock that's been getting short covered left and right. Because that's what's confusing to people. They'll think it's something real and it's not. Let's see. TFSL. TFSL. Okay. Guess that's real. Wow. Guess this is like not looking too good, bro. So this yield is probably gonna start going up. But yeah, you can see, 2, 3, 4, 5%. 5% is like great. Like imagine getting 5% on a $50 stock. But that's annually, right?
Yeah, yeah.
It's not like it's not really. It's not anything to write home about, bro. Like Hex is so superior. It's not even funny. It's
Right.
just
It is kind of
And I
funny.
mean, I'm just asking for like the common person. You know what I
no,
mean?
no. Yeah, of course. I mean,
Like,
you
I'm not
gotta know.
talking,
You gotta know what's
hundreds of
out
millions
there.
of dollars getting 5%. I'm talking about somebody with 5K. You know what I mean?
Yeah, yeah, yeah. Well, that's the thing. You gotta know what's out
Yeah,
there, right?
yeah.
And now let's talk about that because earning yield is difficult. Um, and the fact that Hex pays it in crypto, I think is pretty astonishing because not many yield paying protocols do that. Mostly they pay in stablecoin crap, which is just like getting paid in fiat. Why you want that?
Yeah.
Doesn't make sense.
That's a
So
good
let's
point.
see. Yeah, it's weird, right? Like, why would you be in crypto to earn fiat? Kind of redundant. Let's see this question. What's going on, my love? First, what do I think of gold and silver aspect when they lose control of inflation? Well, that one's actually pretty straightforward. They're gonna shoot to the moon because the only thing that's keeping the price of gold and silver down is the paper market. That's built on top of it via the CME, which is the Chicago Mercantile Exchange. Now, how do we know that? No, it's very simple. It's very simple. Go to gold.
Hey, Wales and Jared. Hey, I'm gonna clock out here
No
from
worries,
work because
brother.
I was double dipping as well. So
No worries,
it,
brother.
it was
stuff.
it was fun learning and being on chat with both of you. And I'll be in the chat for sure.
Anytime, brother.
Yeah,
Anytime.
pleasure
Are you
chatting,
still gonna
man.
be on later on with the quant game?
Yeah. Yeah.
Cool. Yeah, I'll be watching that while I work out then.
Cool, bro.
All right. Take it easy.
Peace.
Thanks, guys.
Hey,
Sure thing,
peace.
bro.
Oh, you have a quant show later
Yeah.
tonight.
Yeah. 8:30.
Nice.
So, that's Eastern Standard Time. So let's look at this, right? Where's the open interest? Why isn't it showing me? Here we go. Open interest means that these are all the outstanding contracts that exist in this market. So this is basically the size of the market, right? This blue line here. So it looks like it's about, I don't know why it's not giving me the damn data point now, but long story short, you would take this number, whatever, 470,000, whatever it is, 123 times 100 ounces per contract, right? Each contract is a representation of 100 ounces, 100 short ounces of gold. So we multiply the value of those contracts by that, multiply by the actual price of gold at this present point in time. And we don't need to get the future, but we can if we want. So let's just make it 1750. And that's essentially, I guess, the amount of ounces in the paper market for gold. Right? In terms of, I'm sorry, that's not right. 47 million troy ounces or whatever, right? You have to remember hold on. The paper market is what moves. Like you'll pay one price in person versus what do you call it, on the futures market. Like it'll be 1760 here or whatever. But if you go to the store and sell physical, it's gonna cost you more. Or you buy it. I mean, it's gonna cost you more. And to sell it, of course, is gonna be lower than what you're seeing, right? Because there's always a spread.
Right.
So let's see here, 197. So bullion, right? That's what we want to look at. So I actually have to convert the 100 troy ounces, this number, into tons. Hold on a second. I haven't done this in a while, so I gotta try to remember how it's done, because it's just not as straight. Because okay, so 1 troy ounce is 31.1 ounces, I think, or some weird like that.
So are you trying to figure out what percentage of the entire gold market is paper?
Yeah,
Okay.
basically.
Okay.
Yeah, it's basically what I'm trying to show. Right, so there we go. 1 troy ounce is a little less than an ounce, right?
Yeah.
So a kilo is like 31.1 troy ounces or something like that. So how much is a ton? Let's see. All right. Give me a second, guys. I'm just making sure. Okay. So 1,016 kilos equals 1 ton for gold. Okay. So how many ounces make a kilo, right? There we go. 1 troy ounce equals 0.03 kilogram. Fair enough. So that means we need a lot of troy ounces to make 1 kilo. So let's see. Right. All right, good enough. So 321 troy ounces. Okay, and what did I have over here? 47 million. So 47 million troy ounces. 2, 3. Okay. So that's 140, 1.4, 1.5 million kilos of gold. So 1.5 million kilos of gold. Now it's going to be interesting. It's going to be interesting because it's going to actually surprise you. You're going to think it's a lot bigger than it is.
Mm-hmm.
But this just goes to show how markets work and why understanding the difference between, for example, a centralized exchange and a decentralized exchange matters.
Mm-hmm.
Because this market, like, you have to realize people actually trade this to get gold delivered, and sometimes they can't receive it.
Mm-hmm.
Because this is a representation of the physical contract, of the physical product. That's what futures are supposed to be. They're supposed to be a way to hedge your risk from the physical commodity. That's the whole reason that futures were actually started. So we got 47 million troy ounces, which gives us 1.5 million kilos of gold. It looks like that's a lot of tons. Hold on.
It's like 1,400 tons.
Yeah. What is this amount here? Yep. 1,400. Oh, long tons of gold. It's actually more.
Oh yeah.
Interesting. Huh. Guess that translates. Yeah, I guess it translates to the same thing. That's weird. Is this right? This doesn't look right. 863,461. Yeah, I mean, okay. Oh, nope. That's not doing the right conversion. That's why. This is converting long tons to something else. Yeah, hold on. Here we go. Yep, 1,400 long tons, like you said. 1,438.
Gotcha.
Yep, so you were right. So we got 1,400 long tons, right?
Mm-hmm. Interesting.
Uh huh.
So like 1%?
Basically, if that.
Not even, yeah.
Weird, right? So let me show you something else, because how do they get away with this? Right? That's the question that always comes to mind for me. So let me show you how they get away with it. Because it's literally right on the Federal Reserve's website. Hold on, I'm gonna have to find this damn bookmark. So old bookmark. Oh no, I'm not gonna find it here. Hold on, I gotta go to my Google Chrome to find it. Give me a second, guys.
So what are the implications of that percentage?
So it's about the flow, right? Interestingly enough, they're able to do what they want with the market based on that little bit of amount of gold, right? Because that little bit of gold is representative of the flows that you see in the market from day to day, right? On top of the volume, on top of the volume that actually happens in the market. So they're like, while it looks small, right? I bet you if we took the total volume of contracts traded and did that math, it'd be a whole lot bigger, as it should be. Interestingly enough, because that's really just a microcosm of what they're doing. They're not, and again, they're not hiding anything, and that's the interesting thing. Like, they put everything out there. And what I'm trying to do now is I'm trying to find a web page that I have bookmarked here for the Fed, where it highlights that they're literal. That it's part of their mandate to suppress the price of gold. Yeah,
Interesting.
yeah, it's part of their powers I'm just trying to find the link so I don't have to, run around Googling for it. But it seems like that would have been quicker. All right, let me see here. Oh, I think I found it. Here we go. Where is this at? No. Where is it? Monetary policy. Nope. Somewhere here. This is. Sorry, guys. Hold on. All right. Why is this not popping up? Conversion. This isn't it. Hold on. Come on. Where is this? Reserve power 2 gold. Nope. Why the hell can't I find it now? This is really annoying. All right, well, basically, it just says that the Fed can price gold however it wants, like loan it out. So you got to remember how? Do you know that in the 1930s they basically confiscated everybody's gold, physical gold in the U.S.?
No, I didn't know that.
Yeah. So in 1933, the government confiscated every person's physical gold, and then it reset the price higher after that. So not only did it steal everybody's gold, it then made itself richer thereafter after taking everybody's gold. So, yeah. That's how they roll. That's how they roll. But, they do what they want, and it's all about the flow, right? So let's look at the volume just for fun, just to compare it to whatever we've been seeing. So we would have to sum up all of the contracts that we see here, just to get a total sum of all the volume in this column. And it looks like it's about 50% of the open interest, or a little bit less than. But again, you got to look at what they've done to the market over time, right? Let's look at, still some volume on here. Interestingly enough, the market actually trades less now. It seems like more, right? But this is really just a specific ramp. And as you can see, it's decreased since then, right? Pretty much the previous levels that it had before, which were constant, pretty much all up until the ramp in 2019 to 2020, right? So we're basically back at where we're supposed to be, as far as volume goes. So, it's just a lot of little things. Now, it almost kind of looks like Bitcoin, right?
A little bit.
Yeah. Up, down move, little rounded bottom, up again. Kind of looks like Bitcoin a little bit. But, there's a reason for that. And it goes back to, the network effect and how it actually, and what it actually is. The network effect is just humans interacting with the market. That's why everything kind of looks the same.
Mm-hmm.
Right? Like, they kind of look the same here. They don't look that far off. They really, really don't. Which is interesting, because you would think that they would. But they don't.
Yeah, it's hard to find any asset in the last year that hasn't gone up.
Right. Well, really, the last 2 to 3 years, really, because they just been pumping everything, and especially after Rona, right? After the Rona dip, forget about it. Yeah, that's what all that printing was about. That's what all that printing was about. I mean, look at crude oil. let me minimize the bars because you had that crazy event that happened in October 2015. I think it was. I don't remember. What the hell was this? Oh, this is April 2020. It seems so far ago. So look, even this kind of looks like Bitcoin, right? Like it's just how people interact with markets.
Mm-hmm.
Like the ebbs and flows, you know what I mean? The ebbs and flows. It's just how people interact with the market. No, that's not what I wanted to do. But yeah, again, that's just a function of the network effect, right? When people start buying, it's just gonna keep going up, and that's it. But yeah, when they lose control, it's really gonna be a function of what people decide to interact with and what they don't. So we'll see. What's going on, Aris, man? Aaron, pleasure meeting you in Vegas, brother. Second at one point in the future, what will be the new Fed currency after the stakes are up? Yeah. That's a weird question, right? Because the thing you have to understand is that the fact you think that's even a question worth asking kind of makes me think you don't know why you're in crypto. And the reason I say that is because crypto is the whole reason that the Fed is on the defense. They have to be. So long story short, you have to basically opt what system you want to be a part of. Do you want to keep getting paid in trash, or do you want to be part of the crypto system, which at least goes up against the trash, right? So that is the bigger question, right? You need to understand that the choice is up to you. It's not up to the Fed. That's like they're irrelevant. They're so irrelevant.
In theory, couldn't they just print the shit out of the dollar and just buy up a lot of crypto?
Sure. I mean, that's what Tether is.
Right, precisely.
Yeah, so yeah, they're already doing that.
Boom.
Yeah. I mean, it's funny, right? Because you don't think of it like that, but that's what it is. Oddly enough.
Just nonchalantly sitting there at top 3 crypto, no one questions it.
Yeah. I mean, 60 billion or 80 billion, but the market cap is 62 billion. What do you think that means? Clearly, they're pumping this shit. Clearly. This isn't the first time I point this out. This is exactly how they do it.
Tether's a Trojan horse.
Yeah. Correct. I mean, that's just what it is. You don't gotta like it. You just gotta deal with it, man. Right. I mean, the market hasn't lied to us yet, right? And I think that that's the most important thing that we need to keep in mind, right? Like, just look at the data points that they can't lie to you about. Everything else is, is going to be suspect, always. Mm-hmm. Let's see what questions we got here. Yep, very modest, perp. Very modest. Yep, that's right. HEX is a cheat code. HEX is definitely the cheat code.
I like that. HEX is the cheat code.
Yeah, it's definitely a hack. And you know what's crazy, right? When you sit there and think about HEX and what its potential is, for people like us that are in so early, this is going to be life-altering for generations on end if everything plays out. Because the price is going to be so high that it's not going to make any sense to those of us with more than 100,000 HEX. And I know it sounds like a lot, but it's not. Because you got to remember, there are people with millions and millions of HEX. Mm-hmm. And there are people that have been around since day one, and the HEX price was so low at launch that you had the ability to acquire that quantity of HEX. But again, the market doesn't give a shit because it wasn't there. The market is only there every day when it's there. Does that make sense? Like, the market has no memory. So just because it traded at 4 zeros at one point doesn't mean it's going to give a shit in the future. It's still going to go to 1,000, 2,000, whatever. Because that's what markets do. And it's really that simple.
That's a great point. Markets has no memory.
Yeah, the markets have no memory. They don't care. And I think that that's the biggest mistake that I know I used to make that mistake as a new person. Yeah. Thinking that price history kind of mattered. And it does, right? But really only to a certain extent. And
Maybe
that's really
short term,
very,
right?
yeah, exactly. Yep, nailed it. It's
So
really
it
only
has
short
short term
term.
memory, but not long term memory.
Exactly. It really, yeah, it doesn't have long term memory at all. That's a good way of putting it. Yep.
Nice.
This is an interesting question.
Price.
Um, hmm.
It depends when it hits it, right? Like
Yeah, yeah, it depends when. That's the thing. That's the time function again.
we're close
You
to
know,
20k hex per T share. So
yeah,
what
and
is
we're
that? Like
only at 10
200k?
cents.
Yeah.
Like we're
So
not even at, we're at 8.3 cents, and we're almost at 18, or we're already at 18,144 hex. Like,
yeah.
that's crazy. That's real crazy. I mean, this is just, look, hex is a beast, man. Hex is a beast all unto its own right. And look, I don't know if you've what I would advise, you should do a correlation chart between the dollar cost of of a T share and the dollar cost of hex. You'll be surprised.
Interesting.
Mm-hmm. Yep.
I see.
Uh-huh. Yeah, I know you get it. I know you get it. So, it's a hard question to answer, right? Because it depends when,
Oh yeah.
right? Because what happens if somebody, like, so let me explain it. So the T rate, right, is a function of the end staking. It doesn't really, it's not determined by the value of hex. It's determined by the end stakes coming out of hex, which is unique, right? You would think that they're related, but they're not. So that's really the answer. That's really the only answer, unfortunately.
Yeah, I'm sure you've looked into the actual contract code and looked at the formula and
Hmm.
try to make sense of it, and you find
Yeah.
that it depends on this variable and that variable depends on, and you get this thing that's just super dynamic. And sorry, I can just hear my echo in the background. It's kind of
No, no
distracting.
worries. No
Um,
worries.
but you see that it depends on, like you said, unstaking behavior and penalties and all of that. At one
Yeah.
point, I wanted to create almost a simulation of the formula, but it proved to be quite the feat, and I just kind of abandoned it. But it'd be something that I think would be really cool to get back to.
Yeah, I mean,
Run a sim.
it's interesting because the system is so dynamic, right? Um, and the cool thing is it
Yeah,
takes time into account for you. Like you don't really have to. It's interesting because it's just like everything is bucketed within these specific set of parameters, and it works based on that. So
yeah.
it's actually pretty cool. Could the CME paper market one day keep Hex down? Nah. Hex is decentralized. Doesn't matter what they do to a paper market with Hex because Hex is removed from that. 1 million T-share. I mean, in terms of dollars, not hard to imagine. At some point in the future, we're already at 1,000 plus, easy. So,
Just give it a few years.
yeah, no rush on that one. I mean, damn. I don't want a T-shirt that costs $1 million just yet. Man. Need as many as possible. All right, let's see what other questions we got here. Yeah, guys, smash those likes on both pages, both YouTube pages. Let's get these damn Hex videos out there. Help these people find salvation.
I think we're doing a good job. I love these comments when people say they've swapped all their alts for Hex and staked.
Yep, yep. I mean, it's crazy, man, because, when you think about it, with Hex, you're not really selling anything. What's going on, Robert? Great chilling with you, brother. Um, the cool thing about what we do is that we're not selling anything. We're just talking
Right.
about what we're talking about, which is like right there and verifiable and all of that.
Mhm.
So it's like you don't even have to, you know, make anything up. Like it's just there. So I mean, that's pretty much the end of the questions. I need to eat and all that. I need to like get ready for this 8:30 session. You
Yeah,
you
man.
guys know that runs long. So thank you guys for tuning in. Gerardo, we got to do this again, man. This was a great conversation. You clearly have a lot to learn, and so do I. So let's keep doing these streams, man. Impromptu was fun. And there's a lot to learn on both sides. Both sides.
Of course, man.
Is it
Yeah.
Is there anything you want to touch on before we go?
I mean, we can touch on just this chart before we go. I just want to get your take on it, see
Sure.
how it makes
Share
you
your
feel.
screen. Share your screen.
Oh, share screen. Boom, 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 boom. There we go.
Boom. There we go. It's a great chart, isn't it?
Yeah. Yeah, I just kind of want to end off on this kind of a note.
Yeah, it's a great chart, man.
Yeah, there you go.
That's just a testament to the design, right? To the fact that nobody here has to lie to you about anything. It's right there.
I mean, I think these peaks over here end up at like hundreds of dollars or something crazy.
I mean, it's hard to say, man. Because look at how fast HEX has moved up already.
Right, we're
Right,
poking
and
our head up above it.
yeah, and now you got Pulse on the horizon. Like, it's gonna be weird, bro. It's gonna be weird because I've been tracking the same kind of data as you, and it's just outpacing at rates just most people can't comprehend.
Right.
Because it's just unfathomable, right? Like, it's just wow. It's really wow. Like, HEX is really wow, and if you ever do a scatter plot of like HEX versus Bitcoin or HEX versus anything, really, you're gonna see that HEX really is the best, no matter what you compare it to, because the returns are positively skewed, which means that they're primarily going to be positive on any day.
Yeah.
It's crazy. It's crazy because that's exactly everything that we talk about, right? The design of the coin, how it trades, the end staking, the staking. Because when you stake, right, the coins disappear. So, you're removing supply from the market also. Right? So it's a little bit of everything. That everything that's in the design of the coin is just bye-bye, right? Just up and to the right, no matter what it is.
And you keep finding Easter eggs, like,
yeah,
or even just wrapping your head around things that you might not have like completely grasped. Like the other day, it just kind of hit me the way the war for long stakes effectively keeps exporting inflation out into the future. So
that's right.
Just that level of effective inflation is going to be so low, probably less than 1% for the first few years.
I mean, imagine when all those end stakes, like the big chunky end stakes from the early days start coming out. How that T-share rate is gonna rip.
Oof.
Yeah.
See, I'd love to run a simulation on that hex.vision and stakes by date, because it is the chart of future market supply. Just assume 100% like everyone acts as they said they would. Plug that into the formula. Assume like a static 10% staking, even though that'll change. And then that would be such a fun simulation to run, man. Like,
it would, because it would show like probably what we would think is the best case scenario, but probably wouldn't be.
Right.
That's what's so crazy about HEX.
Right. Yeah.
Look, I forecasted the price of HEX and the T-share rate, but as a function of each other, like early March, like a week, like maybe 5-7 days later, it was already behind. It was already behind what the forecast was, meaning the actual market price was ahead, and the T-share rate. So, the one thing I'll say is that anytime we try to forecast anything in HEX, it's a futile exercise, primarily because the more activity we have with the network or within the network, the higher the velocity of the gains and the functions that take it there, right? Because again, all of the functions that are embedded in the code are designed to do that.
Nice. So you're saying projections speed up those very projections?
Correct. Because those projections are based on past to present, nothing else. So once that network grows, the effect is going to grow as well, because more people are going to, I don't know if you've noticed, but we've been having some pretty sizable dollar amount stakes hitting the books. And on short term too, not even long term.
Yeah.
Let me find the latest one. It was like $8 million or something like that. What the hell? Like an $8 million 30-day stake. Let me see. Where is it? Oh, what was this? Look at this. This is what I'm talking about. 6 million just staked for 10 days.
Nice.
What do you think that's gonna do to the t-shirt rate? Right?
Yeah.
Like that's gonna get price pumping, man. This is what drives price higher. And now I mean, let's look at that. Hey, look at this. $8 million, man, for 30 days. This is one stake. What the fuck? What liquidity, right? Like, you don't need it, clearly. Like, it's funny, man. It's funny. People have to learn how markets work before they start looking foolish. But looking at this, right? Yeah, but looking at this, right? Like, this is proof in your face.
Mm.
Like, just how sick this system is. I mean, it's sick, man. It's honestly sick.
It really is. Hey, I'll let you go eat, man. I have to go work out, and you have
All
your
right, brother.
Quant Gang stream later, so gotta be
thing, brother.
fueled up for that.
Pleasure
Hey, man,
doing business.
Gotta do this. Yeah, gotta do this again. I learned a lot, definitely. So, yeah, thanks
Sure,
for that.
man.
And
It was a good time, brother.
yes, sir.
All right, guys. Thank you guys for tuning in. You guys know where to find Gerardo. Make sure to hit those likes on both tapes or on both pages. Sorry. And yeah, we'll do this again soon, man. Peace out, guys.
All right, ciao.